Balance sheet reconcilements play a critical role in the financial reporting process in preventing and detecting financial statement errors.
The Association of Certified Fraud Examiners has consistently identified balance sheet reconcilements to be one of the top fraud detection and prevention controls that are out there. Yet, accountants are often never formally trained on the importance of the work or how to do the work properly. So as a result, what we see sometimes is that these reconcilements are not being done at all during the close, or if they are completed, they're either done incorrectly or they're done after the usefulness of the activity has expired. And all of this exposes the financial statements to potential errors or worse.
Understanding how to reconcile properly, timely, and consistently is the key to error and fraud prevention.
One of the most important things that the accountant needs to know is that the act of taking that GL activity from last month to this month and then pasting it into a spreadsheet, that does not constitute a reconcilement. Because when you're just reviewing transactional activity for the month, you're actually leaving out major coverage areas that can just as easily produce a potential adjustment on the financials, such as your aged open items.
Aged open items are temporary items that are identified in a prior month's reconcilement. They should be monitored each month until they are either cleared or written off from the balance sheet.
When we focus our review purely on the transactional activity for the month, we're actually choosing to neglect those aged open items. We actually have to start the reconciliation with that ending balance for the period and then provide enough supporting documentation to validate that entire ending balance.
Second, reconcilements must be properly supported.
For every supporting item on your reconcilement, if it is material, it must be accompanied by source documents.
However, be mindful that there is a pecking order to determine what kind of support should be used when reconciling.
Always support your balances, or as much of it as possible, with third-party documents. So bank statements, government documents, information that comes from your customers or vendors. So when that's not possible, we'll look internally for system-generated information, such as your subledgers. They're also considered quite credible. Now, when that's not possible, that's when we resort to internal analysis. So models, estimates, any derived calculations, maybe a tracking that someone is doing. Be very, very careful when you're considering using informal communication like emails as your source document. Those are generally not considered very credible because they're generally not as substantiated, even if they come from your manager or supervisor.
Lastly, timing is everything. Balance sheet accounts, especially ones that are high risk, should be reconciled at least monthly, and the work should be completed before the close is finished.
To the extent your reconciling work identifies an exception or an anomaly, we want to be able to resolve it and, if necessary, make the adjustment and reflect that into our current period financials.
It can be a challenge to get all the monthly reconcilements completed before close. Look for automation opportunities so that less time and fewer manual steps are needed to reconcile the balance sheet each month.